first big mistake is people just buy stuff because it's going up. Oh, look at that, it's gone up 20% this month. Fuck, shit, let's buy some more. Like, the problem with that is you're jumping on the hype. You're buying something because it's going up, and you're like, oh, it's just going to carry on going up. And because what's happened probably is there's been some news out that said like, well, this company's merged with this company, blah, blah, blah. But what you don't know is everyone else has already bought in their stocks beforehand, knowing that this news is going to come out. The news comes out, the stock price goes up because more twats buy it, and then you see that last, and you're like, oh my god, I should buy it as well because I'm gonna miss it. I need to jump on a bandwagon. And what happens is you just buy it, and then the stock just plummets like another 10%, and you've lost out, and you're like, oh, what's happened? And then you sell it, and then it just continues going up. There's a bit of psychology there, but don't buy something because it's going up. There are many reasons to buy a stock or not to buy a stock, but don't just buy it because it's going up. Like, for example, it could have just been going down for 10 years and then a little pop up, but you're too zoomed in on the charts. You're like, oh wow, it's just gone up 10%. Just don't do it. But to give you some actual details though, there are some things that you need to look at if you want to buy a stock, regardless of if it's going up or going down. So like debt to asset ratios, price to earnings, all that sort of stuff. Is the stock healthy? You've got two different types of stocks, essentially. Growth stocks, or you've got value stocks. Growth stocks are like companies that are new, a bit more speculative, and they'll generally have a much higher price to what they're earning, price to earnings ratio. If you don't know what that is, Google it. I'm about to say it anyway. It's essentially the price the stock is much more than what it's actually earning. So it might have like a 200 times price to what it's actually earning ratio, which this could be bad or it could be good. Like, it just means that people expect the stock to outperform, that they expect it to go up loads. And then you could have some of the price to earnings of like 10 or 15, which is pretty good. And these are probably most likely, depending on what it is, more like a value stock. And a value stock is a stock that is generally just steadily growth over time. They're kind of more what you'd say low risk, even though there's no such thing as risky or not risky. You decide the risk. So their low risk is as in they won't easily just drop like 20% like a speculative stock would. So you're going to want to buy a stock because you like it, you're interested in it, you know what's going on. You don't just want to buy something based on price movements. You know, it's a bit of a beginner way to do things. You can do that if you want, whatever, you know. Everyone makes their mistakes, don't they? Let me get some other reasons up, because if not, it's going to be a very short video. There's another big mistake that people make, and that is trying to trade stocks. Okay, unless you've been in the investing space for a little while and you want to take it a step up and try and, I don't know, enhance your gains a bit more, you've got some time. Trading stocks is the quickest way to lose money. You're trying to buy a stock at a certain price, let it go up and sell it, and then just move on to another stock. Buy it, sell it, buy it, sell it. This isn't investing, this is trading. And that's what a lot of people make a mistake with, newbies especially. They're buying a stock and selling it next week. Fuck. You're not gonna gain like that, you know. You might make a little couple of profits, but then what happens when you buy a stock and it drops down 50%, and now you're selling it, but next week it goes up 50%, and now you've lost out. Where if you just hold it over longer term, that's where you're gonna make your money. That is investing. Investing is not a fucking 1 year turnaround. Investing is investing for 5, 10 plus years, okay, in the stock market. And if you haven't got a lot of money, watch my other video, why investing is a bad idea, because there's no point. You might as well try and increase your cash flow first. I go more in detail in that video. Another thing I'd say is a mistake, maybe not a mistake, depends on your perspective, buying with too much risk exposure. And what I mean by that is, if you have, I don't know, £1,000 and you want to invest it into the market and you put £1,000 on one stock, that's bad risk exposure. It's 100% at risk, because you're now, if that stock goes down 20%, you lose 20%, bang. But if you buy 10 stocks with that £1,000 and one stock goes down 20%, you're now losing like 2%, right? So you need to spread your money out, more eggs in more baskets, whatever the saying is. Spread your eggs in different baskets, yeah? I don't know how many eggs you got. I have a little amount of eggs. My eggs are running quite thin. You know, I need to go to the shop and buy some more. But yeah, just try and spread your risk, okay? So I'd say 5% per stock of your, not of your entire money, of your money that you're willing to invest. If you have £10,000, I'd say no more than £500 per stock that you invest in. Some you can have more in, some you can have less. Some you might think, oh, I only want a little bit of money in there. That's fine. Just put 2% in that one, and then put 5% in another one. You can obviously, the thing is, you might buy a stock for 5%, it might double, and now it's 10% of your portfolio. You can keep it, or you can sell it off back down to the 5% value again, and then reinvest that money elsewhere. That's your choice. Let's find another mistake they make. Another mistake is buying cheap stocks. There's no such thing as a cheap stock. You've got to look into, there's many factors of like how many shares do they have, the worth of the company. Just because a stock is a penny, it doesn't mean it's cheaper than a stock that is a pound. If a company has 100 shares or a company has 1,000 shares, one could be priced at 10 and one could be priced at 1, and it's essentially the same price because one has more shares than the other one, okay? And then one could still be outperforming the other one. So a low share price doesn't mean it's low or high. It doesn't mean anything. You'd need to actually do the calculations to work out. So don't think like, oh, it's 50p, that could easily go up to £100 or 50 cents to $100. It doesn't always work like that. Another mistake is trying to time the market. So you're looking at your charts and it's just going up and up and up. Let's just say, for example, the S&P 500 is going up and just going up, and you're like, oh, I want to wait for it to come down 10% before I buy it. I want to buy it at a good price. Don't try and time the market. Again, you're not investing, you're trading. You need to just, if there's something you like and you're interested in, whether it's high or low, buy it because you're buying it for the long term. And over a long period of time, it's not going to make a difference. That might never come down. It might then go up 10% each month, up to 50% profit, and you've just missed out because you're waiting for that pullback that never happened. So just buy into the stocks that you like. It's currently like that with the S&P 500. It's been going up like 5% a month. It's been going quite ridiculous for me anyway, depending obviously when you've bought it. So don't wait for a correction in the market. There are other people that spoke about this topic, other famous investors. Don't wait for a correction. Don't try and time the market. Just get in if you like the stock. So kind of back to my first point on people buying when the stocks are high, it's similar, but not quite the same as getting caught up in the hype. For example, Bitcoin. I know it's another stock. Or let's just go with Tesla, let's say. Anything. If something's going up ridiculously, ping, 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 that's all over the news, and you want to get in on it, it's too late. Do your research on anything you want to invest, and invest when no one's talking about it, when it's nothing, like Bitcoin was back in the day. Because all you'll be doing is you'll be buying into every single stock that's hyped up in the news, and you're already too late because the money's already been put in there to hype it up. Everyone already knows about it. You're too late. You're only going to lose money at this point because you're buying at a high price. You've got to think, when you're buying, somebody's selling. So if everyone's talking about it, if I own the stock, what am I going to do now? Because everyone wants to buy it, the price is high, I'm going to sell it. Steal from the peasants. To you. And you're going to lose because then the price is going to start coming down. The big people who have the big money start selling things when it's hyped up in the news. And they buy when no one's talking about it, pump the stock a little bit, say some things on TV like Elon Musk, blah, 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 I just bought loads of Bitcoin. Of course you did. Now everyone's going to buy it and push your price up for you to sell it. They just manipulate it. Manipulate it. Don't buy in the hype. Okay? It's simple. Let's go for another mistake. If your stock is crashed down 10%, don't sell it. If you believe in it and you've already done your research, then just hold it because you're holding it for long term. There's going to be ups and downs in the market. Don't be pussying out and selling it just because your stock's gone down a little bit. And also, don't be checking the charts every single day, every single week. Oh, it's up 5% today. Oh, it's down. It's just so mentally draining when you're checking something as if you're trading it. You're not. You're investing. You wouldn't even need to check it once a month or once a year. You can check it once a year. That's enough. And just consistently invest monthly. But you don't need to check the charts every day. For what? For what information do you want? For what reason would you check it? Because you want to sell it? You're not going to sell because you're investing for a long term, no? Unless there's some massive fuck up the company's done and they've like stole loads of money or done some fraud or something. Fair enough, keep your eyes and ears open and then maybe sell it off if you want. Be careful of fake news though, because that'll push the price down and someone else will buy it and it'll come back up again. I've done it where I've sold on good news, and then there's some bad news come out, and then I've bought it because the stock crashed and then it just went back up again. So it depends what kind of bad news it is. If it's like a merger or something like that has failed to go through, the stock will drop, but it'll just pick back up because that doesn't really affect the company's performance, how it was already performing. A failed merger doesn't affect how the company is. So if the price drops, just buy it. Just buy it back. That's my opinion. It's going to take a lot of cutting and editing. So those are some of the biggest mistakes. Don't try and trade. Don't buy when it's high. Don't get caught up in the hype. And manage your risk exposure. And don't buy for short-term gains. To be honest, you can if you want. You can buy some stuff and feel like, I'm only going to hold this for a year and see how it pans out. I'm not too sure in a company. Fair enough. Just make sure that you're managing your risk. So, hope I didn't make that too boring for you guys. If you can please like the video, comment below any big mistakes you think newbie investors make, or maybe a mistake that you're making right now that you need to rectify. Or if you have any questions, give me a subscribe, because it does also help me get rich quicker. As soon as I can get that YouTube monetization, I can start really raking in that money. So, thanks guys. Ciao, ciao, bye bye. Can you subscribe though? Can you, hang on, can you just subscribe to my channel so I feel validated, so I can put some more content out so you guys can watch it. I'm not just going to do purely investing content, I'm going to do some funny shit. Wait for that, yeah.